Welcome to my channel. I'm Doris and I'm here to share with you about my market update. The European Central Bank NCommittee, 50 basis points each February and March. Microsoft and Tesla led the way for the biggest earnings season in 6 years. With more than 23 billion yuan in debt, 800 billion yuan giant declared bankruptcy. Penned by Warren Buffett 2.0. The European Central Bank Governor, Dutch said in an interview on Sunday that the ECB will raise rates by 50 basis points in February and March each and will continue to raise rates in the coming months. Not said, we expect to raise rates by 50 basis points in February and March, and we don't expect to end raising rates by then, and there will be more in May and June. Not said, we December the rate hike from 75 basis points to 50 basis points, which will be the base for many future meetings. So that means at least 2 rate increases in February and March, he said. I do think that we'll continue to be tightening mode until the summer. Not that the second half of the year could be the time for us to slow further from 50 points to 25 basis points, but we're still far away from that. I would like to stress again, this is not seen in the upcoming meeting. The hawkish Dutch central bank governor already said last week justified the ECB to continue tightening policy, arguing that underlying inflation is rising even as overall inflation indicators slow. In another interview on Sunday, Not reiterated the message, saying something is going to happen in May and June, but did not specify how much of his expected rate rise. Microsoft and Tesla led the way for biggest earnings season in 6 years. The biggest risk for investors is that analysts remain too optimistic as the economy oils and demand for the tech sector collapses. Although the U.S. stock market has continued to rebound since the beginning of the year, but the interest rate hike robbery has not yet passed. Tech stocks will face the toughest set as the impact of aggressive rate hikes on corporate earnings is expected, as the earnings season kicks off next week. On Sunday, the Nasdaq tech company fourth quarter profit is expected to fall 9.2% from a year earlier, the biggest drop since 2016, according to data compiled by the media. This war sentiment as Wall Street has been lowering its earning forecast for technology companies for the past few months. While there are already signs that inflation has peaked, economists expect the impact of high interest rates to be less and more visible, pushing the U.S. economy into recession and being pessimistic about recent corporate growth. Microsoft and Tesla reported fourth quarter results on Tuesday, and analysts expect revenue to grow just 2%, the slowest quarterly revenue growth since fiscal 2017. Revenue growth at Microsoft closely watched Azure cloud computing services slow to 35% in third quarter and is expected to slow another 5 percentage points in the fourth quarter as the gloomy economic outlook slows customer spending. Microsoft joined Amazon this week as sales slowed, announced that it will cut 10,000 employees by March 31st. Google's parent company, Alphabet, also followed suit with 12,000 layoffs. Next Wednesday, Tesla will report fourth quarter results. Analysts expect Q2 revenue of $24.34 billion, down 5.17% year-on-year. Adjusted net profit of $4.015 billion, down 7.69% year-on-year. Tesla stock has fallen about 40% over the past 3 months, and Tesla delivers have missed market expectations, recently cutting prices for some models by nearly 20%. Analysts expect the technology sector to be the biggest drag on the S&P 500 fourth quarter earnings. The risk for investors, however, is that analysts remain over-optimistic as the economy oils and demand for the sector collapses. Bloomberg equity strategist Michael Casper said, "Much of the overall earning declines we've seen in the S&P is driven by technology companies. Despite many factors, there is still some negative correction risk in the industry, depending on whether the recession actually appears and the severity of the recession. In addition, 3M reported earnings on Tuesday, Kimberly-Clark and Colgate on Wednesday and Friday, which are expected to show how consumers respond to price increases and whether price pressures are expected to ease. On Thursday, P&G reported lower quarterly profits as the company lost sales in the most recent quarter with an average price increase of 10%. CEO John Mueller has warned that the outlook has not been improved. Financial data firm FactSet says the fourth quarter earnings season go off to a sluggish start, with 11% of the S&P 500 reported earnings as falling 4.6% from a year earlier, the first decline since the third quarter of 2020, expecting revenue to grow 3.7%. According to the Security Times, cryptocurrency lender Genesis Global Capital formally filed for bankruptcy protection in the U.S. District Court in New York. As one of the world's largest cryptocurrency lenders, Genesis issued a total of $130.6 billion, about 880 billion yen in crypto loans in 2022. Genesis, in a filing with the court, its assets and liabilities were between $1 billion and $10 billion. According to media reports, Genesis now owes more than $3 billion to its creditors, and its claims will be processed through Chapter 11 proceedings. Genesis and its advisors said they will continue to evaluate various solutions to advance the process of reaching a global solution. Genesis' bankruptcy filing, which lists the 10 largest unsecured creditors. These include Gemini Trust Company, Mirana Ventures entity Mirana Corporation, PayPal Financial, Munafa Financial Services Limited, and the Coincident Capital International, a cryptocurrency hedge fund, Coincident Capital Entity Limited, Decentraland, Van Eck, Cumberland, Stella Foundation. According to the statistics, the Genesis owes more than 3.5 billion US dollars to the top 50 creditors. It is worth mentioning that Genesis Global Capital is one of the world's largest cryptocurrency lenders, acting for digital assets in financial institutions, such as hedge funds and asset managers. According to Genesis issued a total of 130.6 billion crypto loans in 2022, and asset transactions reached $116.5 billion. After Genesis filed for bankruptcy, the fate of Digital Currency Group is also affecting. Genesis had warned that it would need to file for bankruptcy protection if it had failed to raise cash. Genesis, the parent company, Digital Currency Group, has sent letters to shareholders that the company is suspending its quarterly dividends to save cash. DCG is the world's largest crypto venture capital, but also the parent company for Grayscale, Coindesk. According to official data, the Digital Currency Group was founded in 2015 and has received a report from SoftBank, the government of Singapore Investment Corporation, and the Capital G, the venture capital arm of Alphabet. The FTX explosion was the last straw. Genesis, the reason for sudden filing for bankruptcy, is a series of coin circle crises since 2022. Among them, one of the world's largest virtual currency exchanger, FTX Thunder, is the last straw that broke Genesis. On November 11th last year, FTX filed for bankruptcy. More than 1 million customers around the world, whose Sam Bankman became the target of public criticism. The Securities and Exchange Commission had accused Bankman of misappropriating billions of dollars in customer deposits to fund his business and political activities, and the U.S. federal prosecutor said he orchestrated one of the biggest financial fraud cases in U.S. history. At the time, Genesis urgently stopped customer withdrawals, citing unprecedented market turmoil and liquidity issues. The company has since struggled to find new funding. He eventually filed for bankruptcy protection on January 19th. According to Blue Whale Finance, the FTX, the world's second-largest cryptocurrency exchange, went bankrupt, and Genesis broke run and froze all customers' bank on November 16th, unable to meet redemption request. According to public information, $900 million is trapped in Genesis for cryptocurrency exchange Gemini. The Genesis and parent company DCG has been in secret talks with creditors over repayments and asset management, but have so far failed to reach a consensus and plans could still change. According to people familiar with the matter, in addition, Genesis is working on a restructuring plan and has dealt with creditors, some of whom recommend obtaining a cash and equity portfolio from DCG. If Genesis cannot raise cash, it would file for bankruptcy as early as this week. The move follows to a 30% cut in Genesis, according to people familiar with the matter. Previously, Genesis suffered a huge losses on its bonds to SPF trading houses, Alameda Research and Three Arrow Capital. Both Alameda and Three Arrows filed for bankruptcy last year. After Three Arrows liquidated, Genesis laid off 20% of its employees, and its then chief executive resigned, according to Jiemian News. Genesis suffered $2.36 billion due to the explosion. After FTX bankruptcy, Genesis revealed that $175 billion in its derivatives business could not be withdrawn. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.